Economist, National Stock Exchange of India Limited, as our guest in chief today for this exclusive session. May I request our President, Shri Naresh Pachesia, to welcome Dr. Patnaik with a bouquet of flowers. Can we have a huge round of applause to welcome Dr. Patnaik to this event? Joining us today is Madam Prerna Singhvi, Vice President, National Stock Exchange of India Limited. I would request Shri Pachesia to welcome Madam Singhvi with a bouquet of flowers. We also have with us Mr. Proshenjit Pal, the Chief Manager. Okay, he is yet to join. So when he joins, we will also request our President to welcome Shri Pal. All right. So now I would request our President to commence today's exclusive session with his welcome address.
Dr. Patnaik, my colleagues in the committee, members of the chamber, guests and friends. It gives me immense pleasure to welcome you all today to this exclusive session on Indian markets and macroeconomics, addressed by Dr. Tirthankar Patnaik, Chief Economist, NSE. On behalf of members of Bharat Chamber, I extend a very warm welcome to you, Dr. Patnaik. We are grateful to you for sparing some of your valuable time to share your thoughts on this important subject. It's must be a little unique experience for you to be visiting a Chamber of Commerce led by a member of National Stock Exchange. And this speaks about volumes about two things. One is about the all-round inclusivity of Bharat Chamber of Commerce, and two, the importance of capital markets in today's business environment and ecosystem. So let me introduce Dr. Patnaik a bit, ladies and gentlemen. Over 2 decades, Dr. Patnaik has built a stellar reputation across academia, policy research, and financial markets. Starting as a researcher at the prestigious Indira Gandhi Institute of Development Research, IGIDR, he earned his PhD specializing in high-frequency finance and market microstructure. Transitioning seamlessly into the financial sector, he contributed in various capacities at Citibank in India and Europe, Citigroup Global Markets, and Religare Capital Markets before becoming Chief Strategist and Head of Research India at Mizohu Bank. Since 2019, as Chief Economist at NSE, he has been instrumental in steering macro and sectoral strategy, quantitative finance research, and market insights, underpinning the strategic well-being of one of the world's largest stock exchanges. Friends, India's macroeconomic outlook continues to be a blend of cautious optimism and structural transformation. With inflation levels showing signs of moderation and monetary conditions remaining stable, the policy focus has shifted towards sustaining real growth momentum. Fiscal prudence, enhanced tax buoyancy, and capital expenditure commitments by both the center and states are reinforcing the growth trajectory. Financial markets in this scenario operate not merely as mirrors of macroeconomic health, but also as levers of policy effectiveness. Markets' responses to fiscal announcements, commodity trends, and global shifts are immediate, often influencing corporate strategies, investor flows, and consumer sentiments. As India's savings and investment dynamics evolve, with rising financialization and increasing retail participation, it becomes essential to understand how macroeconomic developments are being priced into markets and how markets, in turn, are shaping economic expectations. It is indeed very nice to have with us today Dr. Tirthankar Patnaik, whose distinguished career and deep-rooted understanding of macroeconomic and market interlinkages have consistently guided financial discourse at the highest levels. His presence today enriches this dialogue, and we eagerly look forward to his perspectives. With these words, I now invite Dr. Patnaik to share his insights on the evolving link between macroeconomy and financial markets and the road ahead for both India's economy and India's financial markets. Thank you. Thank you. So,
Um, Shri Naresh Pachisia, President, Bharat Chamber of Commerce, ladies and gentlemen presented here. It gives me great pleasure to be amongst you today to speak about the Indian markets and macroeconomics. I could do no better than Mr. Pachisia's explanation that today the way markets behave and reflecting the Indian macroeconomic scenario is relevant as ever. But the other side that Mr. Pachisia spoke about, that the macro also reflects what happens in the markets. Today, it is true more than ever. It takes, uh, let's not go much further than to just April of this year, when we saw Mr. Donald Trump, who is President of United States, talk about how all of us remember the screens when he came up with a big chart which said, this is the tariff that I will have against one country, two countries. Never mind the rules of the game, how they got changed, but that's fine. So the idea was that was one example where an event was reflecting on the global economy and the global markets. Fair enough. But what happened a week later is interesting. Markets tanked. US markets tanked significantly. And I'm not ascribing any causality to this, but we know that we saw pauses on each one of those tariffs. At every point, we had a scenario that no, these tariffs will not start immediately, but they would start after a period of time. And that period of time could be a month, could be 3 months. As in this case, from the first week of April, things were pushed on to first week of July. So much so that, if you read the Western press, there is a trade that's going on right now. It's called TACO. That says Trump always chickens out. Very interesting. It means the idea is that while one can take significant decisions in the interest of their own country, that is fine. But when the markets react, you have to stop and think again. I will go a little further. Maybe 2 years back, we had a prime minister of United Kingdom who presented a budget which entailed a significant increase in spending without actually accounting for the right budgeting process to account for those funds. We know what happened to the prime minister. Yeah, very short term. So the idea that today the markets reflect the macro is equally, true as the macro reflecting the markets. These are just two incidents that we have seen. My presentation today will essentially give you an idea, a broad idea of what India is, what is the India story. I'm sure all of us are very well aware of what is happening in India. But allow me the indulgence of seeing it through my lenses. So, because, as Mr. Pachisia pointed out earlier, I have been working with the markets. Before I joined here, I was in investment banking. I did some stint in corporate banking as well. Uh, there is a view that we have of the Indian economy and the markets. At the exchange, where I've spent the last 6 years, one is afforded the luxury of taking a slightly longer look. One is afforded the luxury of looking at a broader view and therefore take a longer picture than the short term, that comes so easily to all of us today because of the advent of news. All of us can switch on a TV channel and see what's happening in the markets. But I'll try and give you a slightly longer term view. And my presentation would be about 35, 40 odd minutes. And I'm very happy to discuss what happens and on each of these points. And in fact, that is where the discussion would grow richer. I also have my colleagues Srimati Prerna Singhvi here, and Shri Prasenjit Paul, who are my colleagues in the economic policy and research team at the National Stock Exchange. So this is how we start. Can we have the next slide, please? Can we? Thank you. Yes. I'm going to talk about four topics here. The India story, developments in the last 10 years, they have been significant for all of us. I'm going to speak about the market and its reach. Given the prior discussion that we've had, this is important. And what are contemporary dynamics? So we'll start with the India story here. I just want to take you some time back. So these are two columns of data. And as economists, the one thing that we deal with is data, a lot of data. And you would know, so the idea will be to look at two columns of data here, 10-year data. This is the long term in some sense. So, and we'll see what we have done in the last 10 years. So today we are the fifth largest economy in the world. No, we are the fourth largest economy in the world. That is 2025. This is 2024. So just some idea about what is happening in India. But 10 years back, 11 odd years back, we were the 10th largest economy in the world. 10th. From 10, we have gone up, 6 ranks today, fourth largest. In nominal GDP terms, India's annual output was about $2.1 trillion. And today it's roughly $4 trillion. In the last, if you look at decadal growth, let me not look at what's happening with growth this year or the next year. Last year it was 6.5, this year 6.2% expected, 6.5% expected. But the decadal growth rate used to be around 6.8. Today, the decadal growth rate, last 10 years, is on 7.2%. Inflation, and this is very important, inflation at that time was nearly double digits. We all worry about growth and inflation, right? We all want high growth, we want low inflation. Look at that. Higher growth, lower inflation. Today, India's inflation, and this is an annual figure, 4.6. Today, as you all know, inflation is less than 4%. Less than 4%. Again, we all need investment in India as a percent, to grow further. So as a percentage of GDP, 10 years back, we were at 1.7%. We have to go a long way further, but we are doing much better than we did in the last 10 years. Before 10 years, 3.1%. And current account deficit, this is something that we all get worried about. Some of you might remember 2013 when India was part of the Fragile Five. So yeah, that current account deficit today is 0.6% of GDP. And foreign exchange reserves, because we don't have a fully convertible currency, foreign exchange reserves are important. We had $300 billion 10 years back. Today, we have roughly $700 billion. This is where we are. So this is sort of the scorecard in the last 10 odd years. And, it shows IMF numbers, not our numbers. IMF numbers shows that in terms of incremental contribution to global growth, India today is at 16%. Every year, the world grows, the world GDP grows. 16% of that comes from our country. And it remains one of the world's top FDI destinations. In the last 25 years, we've got over $1 trillion of FDI. And this is where we are today in terms of the Indian economy. We are large and we are growing there faster than we did in the last 10 years. Of course, there is a long way to go further, but this is where we are. And I don't need to tell you how uncertain the world is today. And in this uncertain world, this is India's scorecard again, ladies and gentlemen. Annual growth, I show you a trend there. Annual inflation, just as we can be proud about growth. For instance, you see a negative number there, right? FY21. FY21 GDP growth is negative. A quick quiz question for everybody here. When was the last time India had negative GDP growth? Before FY21. FY21, no prizes for guessing. It was the pandemic, right? We went, about 6 odd percent negative. When was the last time do you think we had negative GDP growth? 1990? No. Good answer. We had a tough time. with the first Gulf War. We had a major balance of payment crisis. It led to the liberalization program. But no, India had positive GDP growth even then. So when did India get, was it the global financial crisis of 2008? No, India had 6.7% growth then. When did India last have negative GDP growth? Actually, after that also we got negative growth. But when? When was the last time? Not 1991, not 90, not 1991. So it was 1978. So what happened was we had the second oil crisis. 70s were marked by two points. One was this first oil crisis in 73, which by the time I spoke about inflation, right? 9.4%. At that time, India's inflation was 30%. 30%. And that was the first oil crisis. The second oil crisis came in 1978. Okay. And at that time, India got negative GDP growth. 78, 79, around that time. Since 79, India did not have negative GDP growth. Come what may, low, but never below zero. So this is the Indian economy, ladies and gentlemen. Sometimes we have to take a step back. I told you that at the exchange, I have the liberty of taking a step back and looking at our economy. And I have to extend this chart all the way back 40 years to get 1 year of negative GDP growth. So 78, 79, and then 2021, when it was a once in a century event. By the way, India's GDP growth was negative. What percentage of the world's countries got negative growth? 93% of all the countries in the world got negative growth in FY21. 93%. It was difficult. But since then, look at how we have come back. The numbers are 8%, 9%, 6.5%. So India is the world's fastest growing economy. And that is why the ranks are 10 years back, you're at 10th. Last year, you were 5th. Now it is 4th. Of course, competition gets tougher now. It's very difficult.
Any major economy was positive during COVID-21?
No major economy was positive during COVID. No one.
Must be minor countries.
Countries with GDPs of $100 million, you won't count them. Islands, they would have positive growth. Otherwise, no. Now, inflation, 4.6%. Control, that was last year's number, FY25. Now, less than 4%. And currency, range-bound currency. Big problems we had in 91. I remember rupee was 12 to the dollar, went to 18. That was not a depreciation. It was a devaluation. And then it went to 31. I know in early 90s, I remember rupee was flat for many years at 31 rupees. Today, rupee is at 80. But that's not the problem. The problem is the volatility. When businesses see high volatility of the currency, that's when it makes them difficult to take longer term decisions. Rupee's volatility is amongst the lowest. This is the idea that India has been in the last 10, 11 odd years. And I'm going to speak a little bit about services in India. Everybody speaks about manufacturing, what we need to do about manufacturing. But I'm going to speak a little bit about services in India. Services, as you know, are one of the biggest contributors to India's GDP. Just to give a sort of a breakup, agriculture, industry, services. Agriculture contributes roughly 17% of our economy. Okay. Industry is about 28 odd percent. Everything else comes from services. How was the scene earlier? When we got independence in 1947, about 45% of the economy was agriculture. So agriculture has come down gradually, not really. In 78, when India got its negative GDP growth, I just discussed, the agriculture share of GDP was still 35%. So 30 years from 45%, you come to 35% odd. That's it. We are still a massively agricultural economy. Today, that number is coming down to 17%. The idea is it might come down to 14, 15% very soon. So India is no longer an agricultural country, but we know that. The numbers are showing this. Services, on the other hand, have kept up. You'll be surprised. Even during independence or late 70s, manufacturing share was roughly 1/3. It has not gone up. My point is, what took up the share of the space ceded by agriculture? It was services. So some numbers on services, ladies and gentlemen. These are numbers here. So our share of services has actually gone up in the GDP. If you look at companies in India, new companies that come up, so in FY24, we have latest data there, about 185,000 new companies came in India, and of which nearly two-thirds, more than two-thirds, were from the services sector. And the next chart will show you how our share of services has improved. So by the way, our merchandise trade is still larger than services, but services, you should see the growth. So in global ranking, we are 16th in terms of merchandise trade. When we look at trade, actually. But in services, we are 7th. And you can see a 3-decade CAGR here, not a 1-year, 2-year number. This is a long-term story. Services have grown at 15% CAGR. Goods have grown at 10% CAGR. I mean, in this audience, it does not take much to explain. You have a 5% difference over 30 years, how much money extra is made on services. So the idea, that India does not and will not have a long current account deficit going forward is built on how our services are growing now. So in terms of shares, look at this. Our share of global services exports is 4.3% versus merchandise is 1.8%. So today we are a bigger part of the global services economy versus merchandise, and we are growing faster. This is the sort of India story. And what are these services? Of course, you can see goods and services on both sides here. These are first, I'm going to show you our goods export basket. Everybody knows we import a lot of crude, but does everybody know that we export a lot of crude products as well? Our largest exports are also petroleum products. This is a story that was not true even 15 years back. The story from the first Gulf War was, yeah, you import 80% of your crude. Great. Because you don't produce enough crude, and therefore, to run your cars, to run your locomotives, you need diesel, you need petrol. But today, petroleum exports are our largest exports. They are more than our machinery, gems and jewelry, agri products, electronic goods, pharma. All of them have done well, but compare that with petroleum products. Today, we import a lot more. This is the changing side of the Indian economy. In terms of services, you can see business services, travel, transport. These are some of the big part of our services bouquet as well. The other story that, again, many of us miss in India. I, for one, when I did my studies, 30 odd years back, one point that we all wanted to get jobs in were the centers of Citibank or Standard Chartered or IBM or Accenture. Many of our children these days also want to get those jobs. So the idea is these are global capability centers. What are they basically doing? They are generating services income. Okay, they're generating services income based on our educated labor force and then contributing to their economy. Fine. And these GCCs, how big are they? What is India's share? I just wanted to share. 50% of the global capability centers are in India. Imagine that. Rest of the world combined, 50%, India, 50%. So this is how big we have become now. The growth, well, 5 years back, 1 year before the pandemic, we were doing $40 billion. Now we are doing about $65 billion. That's the growth. In the next 5 years, we'll get to $100 billion. This is the story of Indian GCCs. And the slide shows the hell of a lot of companies that are there. Any foreign company that you think of, big ones, are there. And what is happening? See, the quality of services that Indians are putting in these GCCs is improving. So 30 years back, Indians were basically doing data processing. They were doing things cheap. Body shopping was the pejorative term. Today, many large companies have their research centers in India. Many large companies, be it Samsung, be it an IBM, be it a defense, producer in the US. So research centers are in India, and this is because of our quality of our labor force. By the way, I'm not in any way, there is no wool over my eyes when I talk about labor force in India. I'm an economist, and I'm aware that the bigger Indian story is to improve our labor force. 70, no, 22%, 78% of our country has not gone beyond 12th standard education. Everyone in this room has studied after 12th. So you are in that 22%. If you have done masters, maybe you are in the 10% of our labor force. How big is our labor force? 640 million people, 64 crore people, and of which, if you have done masters, you're in the top 10% already. And if you have done a PhD, if you have done some professional courses, you know where you are. This is the India story, which means there's a huge opportunity. I've been always optimist on India. I see that as a great opportunity. Indians, when they study more, simple answer, as they study more, their productivity will improve. The average Indian makes about, in terms of productivity, about $7 an hour. The average American makes $82 an hour. That's the difference. You study more, you get better. But the big promise of India is, even with that 5%, and a fraction of that 5% goes to these GCCs, you still are 50% of the world. Let that sink in. This is the sort of India story. Even with that 5%, a fraction of that 5% that gets employed in GCCs, you are already half the world's market. And some other things here. I will go faster here. Yes, there are many places where India is thought that India does not have high-tech capabilities. Semicon manufacturing, EV battery manufacturing, defense, aerospace, particularly after what happened in May this year, a lot of things have sort of changed. For the longest time, I know I grew up in South India, okay? And very close to my house I grew up in Avdi, was the heavy vehicles factory. And, we used to make Arjun tanks there. And thanks to Russian collaboration. So I grew up, and one of the things that one of the cherished memories of my childhood is sitting in a T-55 tank. Really cherished memory. And if you haven't, it's a great thing. I mean, a T-55 and a T-72 tank, it's an amazing thing. 49 tons of, pure power. And, and my uncle used to work at Hindustan Aeronautics. Again, they used to manufacture MiGs. Mikoyan Gurovich used to make MiGs. At that time, 21, we didn't get any 25s, but 27s. Yes. So, and 29s. Yeah. So,
on this note, I just want to, announce the presence of Mr. Grigory Antonenkov, Senior Consul of Consulate General of the Russian Federation in Kolkata. Please give him a big hand. And Ayudh Bhushan, Dr. Rajiv Chakravarti, former head of the Ordnance Factory. So when you are talking about this, this is so coincidence. I could not help but barge into for this introduction. Sorry about this.
No, really serendipitous to meet you both. Really. So it was a cherished memory. It remains a cherished memory, actually, sitting in one of those vehicles. And the thing is, India was not a big defense producer. Okay. Today, things are changing. Today, we have a light combat aircraft. Today, things are moving finally towards, a place where India can actually start producing. But thanks to Russia anyway, S-400, I mean, absolutely. So I will switch gears now. Why is it that India is doing well despite all its challenges? So one part is India has managed technology quite unlike any other country. So we don't have the world's fastest supercomputer. No, we don't. But we have used technology at a scale No other country has. And I'm including China in this. So India, by the way, uh, I don't know if you know this, was the world's fastest country to adopt, not first, but the fastest to adopt 3G, 4G, 5G. This is not the first, but the fastest. So growth in India in these things has been phenomenal. Indians are no longer, no, not just the country that uses the highest amount of data in the world, highest amount of data. But, and this should be the surprise, Indians are also the highest per capita users of data in the world. We use more data than an average American. We use more data than an average Japanese, an average Swiss, any of the rich countries of the world. Indians use more data than them at a per capita level. How do we manage that? Now, this is again the India story. We watch YouTube on it. So, yeah, not everything is great. But the fact is, we have technology, and technology is the great equalizer. Ladies and gentlemen, I mean, there's a separate, talk in itself as to how technology has changed our lives. All of our lives, yes, but today technology puts information at the hands of the long distribution that we have. The poorest people have the same access to technology than that we all have in terms of having the phone, having free, knowledge on YouTube. But the problem is they are not educated, and therefore they're not able to use that information as well. So we have crossed the first leg. Access has been provided. Now, how to use it better. So technology, in many ways, it allowed us to have a COVID program. There is collective amnesia about COVID. Everybody tends to forget about COVID, but not many people know that of all the countries that gave vaccines, the world vaccinated the world citizens, right? India was the one country that tracked every vaccine. Every vaccine. So, I got one vaccine, then I got a second vaccine, then I got a booster. This was all tracked. And the reason why it was necessary to track it was because if you don't, it is very easy in India to, pay and then get your share, which leaves nothing for the rest. So, I mean, people would have not been able to distribute it properly without COVID in existence. And of course, I need not say much beyond UPI or Aadhaar. UPI, very interesting. Everybody uses UPI these days, pretty much. We don't think too much about it. UPI is a real-time peer-to-peer, money exchange program. Do you know our India's share, global share? What is India's share of global such transactions, peer-to-peer money? 48%. So the whole world, India is not 48% of world's population, but 48% of all real-time peer-to-peer transactions, when they happen in India. So UPI does today, I mean, you can imagine the number of transactions that UPI is doing every day. So every month. And we are a nation of young people. How young? You can see this. Our median age is just 28 years old. That's it. And we are not the youngest country in the world. No, 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 no. There are countries, just go to our west, immediate west, Middle East. Pakistan has a younger population. You go to sub-Saharan Africa, younger population. Because they are behind us in terms of growth and development, they have younger populations. And the moment you come to countries which have, got growth earlier than us, so the whole of Europe, they have an older population. Fair enough. But where India stands out is on that chart. Look at the young population and then see the size of the young population. So India today has 1.4 plus billion people. China is a comparable country, and the average Chinese is 37 years of age. The median Chinese, the median Indian is 28 years of age. So, I mean, it goes without saying that India has the highest number of young people in the world. Highest number. India's dependency ratios are favorable, at least for the next 25 years. And this is more than what can be said for many countries. The average European is, the average German is 45 plus today. Let that also sink in. The average Japanese, nearly 50. India, on the other hand, is 28. By the way, this gift is not forever. It's there for the next 25, 30 years. 2055, we'll be in the same position. We will also have, like China, population actually decreasing. This audience, there are many who are of my age who would remember that when we grew up, the biggest bane of the Indian country was, oh, we have population. Yes, that population bane has now become a boon. It's actually become a boon. Who would have thought? I love my subject because of that. I mean, yeah, who would have thought? We grew up seeing, advertisements on TV about birth control. Yeah, today the average Indian woman has a TFR just around 2.1, which is you need a 2.1 TFR, total fertility rate, to keep the population constant in many states. So I work at Mumbai, right? Maharashtra has a TFR of 1.6. What does that mean? After a few years, Maharashtra population will actually go down. So barring parts of northern India, where education levels are still very low, India's population is flattening out. So this gift is there for the next 20 years. After that, India will have the same population, same problem like China. You will have robots, traveling in subways to deliver Swiggy, Zomato stuff. Yeah. So every gift is there. It's not forever. Yeah, there's a window of opportunity right here. And we have to leverage the demographic dividend. India has a great diversity. There's an enormous diversity. Every state in India is a country. Every state itself in India is a country. In fact, one way to very quickly show this is this. West Bengal has enough people like Egypt. Egypt is a known ancient civilization. That many people are there in West Bengal. And then Orissa, where I come from, is as good as Spain. France, whole of, is just Madhya Pradesh for us. Mexico, one of the big countries, yeah, that's just Maharashtra. So this is the scale of India. We should take some time to understand just how big India is. How big India is. Brazil is just Uttar Pradesh. That's it. So, now, quickly, in the last 10 years, what have we done? So I spoke about some numbers. But beyond numbers, these are some of the things that have happened that have contributed to a better economy for us. So it is debatable how life has improved for the average Indian. Of course, many people will agree, many people won't agree. Our own incomes, I don't know, I'm one of the favored ones in that sense. My income is certainly more than what I earned in 10 years back. That much is true. But there are many other things. So today we have an insolvency and bankruptcy code. It allows us to look at capital that gets freed when companies always do not do well. We have a goods and services tax, amongst the largest implementations in the world. By no means it is perfect. By no means it is perfect. But it's a long way from where we were before that. We've had corporate tax cuts. We have a simplified labor law. We have a long way to go, but we have. We have a global expansion of UPI. We have many FTAs. Many of the things that were never even considered possible, Air India, LIC, today are listed companies. These things have happened. Banking sector, there have been major mergers. So a lot has changed. RERA, again, something very interesting in terms of the real estate sector. So a lot of changes have happened in this regard. GST, of course, the growth in GST is something that, Indian fiscal balances have to thank for. As a macroeconomist, one of the big worries that India always has had is its fiscal deficit. And one major reason why fiscal deficit is no longer a big problem is because GST has done rather well. Now, at an individual level, the experience with GST has been mixed. But at a macro level, GST has shown a CAGR of around 11% in the last 7 odd years. And what has that led to? The other thing is IBC, the gross non-performing assets have actually come down. So as a macroeconomist, I can't help but think about the twin balance sheet crisis. So the last 10 years, ladies and gentlemen, before 2020, around 8 odd years, we had a situation where Indian banks had too many bad assets. They couldn't lend. And Indian companies were over leveraged. They couldn't borrow. So banks can't lend because of their bad balance sheets, and companies can't borrow because of over leveraged balance sheets. So you had what is called a twin balance sheet crisis. And this had led to growth. In FY15, growth was around 8%. In FY20, growth was 4.2%. And this is before the pandemic. So this was the gift of the twin balance sheet crisis. That crisis is behind us. Indian bank balance sheets are their best. Are Indian corporates borrowing? No, not really. Look at the debt equity ratios. Because it takes time before corporates will borrow more. Yeah, I spoke about fiscal prudence actually. And infrastructure. So the one thing India always has a complaint about is infrastructure. When we travel on the roads, the time it took us to get to Bharat Chamber of Commerce, infrastructure is always has been a problem. But one nuanced way to look at infrastructure is the following. There is infrastructure at the central level, the state level, and the local level. Central infrastructure is okay. I would not say great yet, but it is doing okay. Why am I saying okay? See, economists are generally conservative. But if I tell you that in the last 10 years, the national highway length in India has doubled, that's not a bad number. If I tell you that 95% plus of India's railway lines are now electrified, that's not a bad number. Thirdly, if I tell you that the pace at which we are adding national highways, it used to be 10 kilometers per day. Whole of the country, all contractors, 10 kilometers per day. Today, that number is easily 45 odd kilometers per day. If I tell you that the number of airports, okay, never mind, see, they may not be all used well, but the number of airports has gone from 78 odd to over 140. That's not bad. So that is the central infrastructure. State infrastructure, a long way to go. City infrastructure, a long way to go. This is the India story. So there is a lot of promise yet, but it has to be a nuanced answer on infrastructure, frankly. And social reforms, yes. See, the one thing is you can't have growth if you can't take care of your poor people. Gandhi's principle of, the idea was that whatever you have a problem with, if you're not able to help the poorest person you meet in front of you, it's actually from economics. John Rawls, a famous economist philosopher, used to have what is called a Maximin principle. Same thing. The best way to improve social welfare is to maximize the welfare of the minimum people in the country. So you can't do well if your population is not fed. Can you feed them beyond going broke? Answer is yes. And that is what exactly has been happening. We have a food program. That's the world's largest food program today. We have done a lot of work on providing energy that is not based on indoor air pollution. The Ujjwala Yojana. There's a long way to go in many of these things, but there's a long way covered as well. And now the market and its reach, the third part of my story. I have two columns here. Again, markets. So market cap to GDP 2014, 60%. Market cap to GDP today, 130%. In other words, markets in 2014 were smaller than the economy. Markets today, well, you can look at that. Investor base. This is interesting. Investor base means the number of unique investors that were there in India. Okay. In 2014, we had roughly 1.6 crore investors, 16 million. Today, yeah, the number is 11.6 crores. That's the number of investors today. So something very interesting here. It took us 14 years to reach 1 crore investors. Mr. Gregory, 1 crore is 10 million, just to help you understand. So it took us 14 years to reach 1 crore investors. And the last 1 crore came in 5 months. That's the pace. So one quick question, which state, what is West Bengal's rank in the number of investors in the country? We have state-wise data. What do you think will be West Bengal's rank?
Third.
Third. Who will be first? Maharashtra. Okay, correct. Who will be second?
Delhi.
No, Delhi is too small. Gujarat or Uttar Pradesh?
Gujarat.
Gujarat. Second, Gujarat. Third?
Uttar Pradesh.
Third, Uttar Pradesh. Then what about fourth? Fourth, West Bengal. So you guys are not entirely right. I will have the answer in front of you in a bit. IPO listings, new companies. 2014, we did 7. Last year, we did 268. Read the newspapers today. This year is again bumper in terms of IPOs. Equity raised $0.2 billion, $19.5 billion. Last year was a record year in terms of capital raising. The Indian household has started losing its purse strings. So let me ask you, what portion, where do Indians save, frankly? Indians are famously frugal, parsimonious. Where do we save? I thought below the pillow. That's what we did long back. And then banks, of course, postal to some extent. But you know, in 2014, the amount of money that the average Indian saved, what percentage was in mutual funds, shares and debentures?
13%, mutual funds were 13% of bank deposits. And today it is 31% of bank deposits.
But bank deposits are not all owned by Indian households. They have corporate stuff as well. So you can break them down. There's the government, there are corporates, and there are households. I'm looking at the average Indian household. Number is not even in single digits, around single digits in 2014. Today, the number is just about touching double digits. So we have a long way to go in how much capital can actually come into the markets. But look at the numbers here. Look at mutual funds, for instance. In 2014, $136 billion. Today, $844 billion. I can tell you in rupee terms, mutual funds today are about 72 lakh crores. 72 lakh crores. This is a huge number. The number of listed companies and the market cap. Very interesting market cap. In 2014, $1.2 billion. Today, $1.2 trillion. Today, $5.4 trillion. So how big is this market? Let me just give you an example. So this year, we became from the 5th largest economy to the 4th largest economy. Which country did we beat? Japan. Yeah. Who's ahead of Japan in terms of the size? Which are the 3 other nations? Germany, China, US. Now it becomes very, very difficult, because these countries are larger. Germany's market cap is half of India's. Let that sink in. Half.
In terms of mutual fund growth, I can give one
Please.
figure. So open-ended mutual funds came in 94-95. We started mutual fund advisory in 96. That time, ex-UTI, erstwhile Unit Trust of India, ex-UTI, the total AUM in mutual funds were less than 10,000 crores.
Oh.
Today, it is nearing 75 lakh crores.
Yes.
And I'm talking about 29 years.
I mean, crazy numbers. Yes. 94, 95.
Yeah, open-ended funds started coming, private sector mutual funds in 95. We started in 96. And in 29 years, we've seen a growth from less than 10,000 to
75 lakh crores.
nearing 75.
It tells you the importance of market, frankly. So India became the 4th largest economy. India has been the 4th largest market for a long while now. And if you compare, big markets are a reflection of big per capita incomes. In India, our per capita income is less than $3,000. And yet, so this is my third bullet here, no other country with a per capita income of in the range. You go from 2,500 all the way till 20,000 will have a market of India's size. So, and this market of $5.4 trillion, 440 odd lakh crores is available with $3,000 per capita income. Can you imagine what happens if our per capita income grows? Yeah. So, and India's equity market is large related to its per capita income. This is how growth of investors has taken place. So, I mean, not quite as fast as mutual funds, of course, but the number of people in the markets has grown at a pace which is blistering. Just before the pandemic, we had 2.9 crore investors. Today, we have 11 crore investors. That's the kind of number that we are seeing. And what and who are these investors? Unfortunately, no one here. I think the students that are sitting there or the students that are sitting there, um, maybe they are not students, but I took the liberty. People in the 20 to 30, cohort are the major new investors in this country. So, I just remember, again, something your generation will understand. Spider-Man has this comment, right? With great power comes great responsibility, right? That's what it is. In fact, in 5 years, the average age of investors in this country has come down from 41 years to 36 years. You can imagine how many new investors are now added and how many of them are young people. And one other thing, the number of women in the market has gone up 7x in the last 9 years. So that's the sort of story that we have. And of course, I have many, many more, but I'll now go slightly quickly. So yes, these are the answers. First, Maharashtra. Second, UP. Third, Gujarat. Fourth, Rajasthan, just pipping West Bengal to the fifth position. So Rajasthan and West Bengal are neck and neck in terms of investors, number of investors in the country. And if I talk a district, which district in West Bengal has the highest number of investors?
Howrah, Hooghly?
Is it Howrah Hooghly or is it North 24 Parganas?
Not good.
Actually, it is not 24 Parganas. So, I mean, the idea is, by the way, we have a monthly report called the Market Pulse, which gives you a lot of this information, frankly. We just shared one with you, sir. I mean, yeah.
We have it in that.
So today, markets are such that 1 in 5 Indian households has some shares. 1 in 5. And how many Indian households do we have? 140 crore people, 4 people to a family, 35 crore families. 1 in 5 has some share with the market. So please do not think markets are a preserve of some people who have some idea with the markets. We have nothing to do with the markets. I come from this part of the country. And in my extended family, nobody has any connection with the markets. That's not the story anymore. Ladies and gentlemen, things have changed. Things have surely changed. Look at those. 99.85% of all the PIN codes in the country have some investor. 99.85. So, I mean, markets are everywhere. By the way, this is again a different story. In rich countries, when economic growth, is beyond a particular point, economic per capita incomes rise, people stay away from the markets. People do invest in the markets, but through mutual funds. India, both the things are true. Mutual fund bhi sahi hai, share market directly bhi sahi hai. Both the things are happening. So mutual fund growth has exploded. Number of investors has also exploded in the markets. And contemporary developments, this I will go very quickly because everybody knows. This brings me to the end of my presentation here. There are, growth, hurdles in front of us. The problems that we see in terms of tariff wars are unlikely to go away. We have moved away firmly from a unipolar world in the last 30 odd years since the end of the Cold War to a multipolar world now. Strategic autonomy is the game that India, works on. And in this story, look at the highest growth in 2026. 6.3%, India is doing okay. I mean, can India grow faster? The potential growth for India is 7%. But look at that column and how many countries do you see that bring, all this while I've been talking about India's size. Now let's talk about India's growth. Because people might say, I mean, what's the problem if you have what's the point if you have great size but no growth? Not only are you big, but you are growing faster. So that's the sort of story. And numbers have been quite okay, 7.4%. And here, just to tell you that we are not, as NSE, we do not formally give out our growth forecast. We've given you what are other guys sort of saying. At the very least, 6.1%, most optimistic, 6.7%. If I take a median number, 6.4, 6.5% is what India is going to do this year, with implications downstream. If you grow 6.4% in real terms, you do about 6.4 plus 4%, about 10.5% in nominal terms, which means your corporate earnings should do about 12 to 13%. That's the sort of story that India will have going forward. And this is the sort of path to a $5 trillion economy. There are headwinds. Yeah, this is the end. There are great tailwinds for India: rising working age population, growing consuming class. Government expenditure is doing well. Strong position in service exports. I spoke about this. There's a lot that we can do to be a part of global supply chains. Our capital markets are very deep now, very good now, although they are not deep enough, as we have seen in the recent episode. But there are headwinds ahead of us also. The skill gap challenge I did speak about, lack of tertiary education. How can you have what is the situation? One of the aims of the government, central government, is to bring tertiary education to 50% by 2030. Imagine that. By 2030, we hope that half of India will have at least college education. Something you take for granted these days, not true for every Indian, even now. So there is a high risk of adverse climate changes. Ladies and gentlemen, I don't need to emphasize further. Climate risk is real. It is there. The risk does not go away if we don't think about it. So those are the two major headwinds that I see. Skill gap challenge for Indians. How to participate in this new world when technology. Notice I did not speak about AI, ML at all here. Because I'm not happy about AI, ML if 3/4 of my country has not studied in colleges. We will figure out AI, ML, no problem, but this is the bigger challenge. And then short-term headwinds are commodity prices, elevated debt levels you want to bring down, and a geopolitically fragmented world. It doesn't do well. Thank you. I'll end my presentation here.
Thank you so much, Dr. Patnaik, for your excellent presentation on the Indian economy, its past, present, and the shape of things to come. The topic is also about Indian markets and macroeconomics. So some linkages. So in the last, he was telling about corporate earnings should be growing at 12% per annum. Well, so as a market returns from equity as an asset class, that's the return you can expect over a long period of time, sustained period of time. 12% plus is the return that you can conservatively expect going forward if we were to link this. And this brings me to my question to Dr. Patnaik before we open up for everybody else. Dr. Patnaik, you spoke on Indian markets. That's the first word, and then macroeconomics. Okay. You are lucky that you are speaking at a time when the markets are on. So everybody who's active in the market is busy with the markets at till 3:30. Had this session been after 3:30, you would not, instead of the gentleman, Mr. S.M. Surana, sitting here, we would have his more active investor son, Mr. Sunil Surana, sitting here, who is my golfing partner as well. And he would have said, Sanu ki, mera kya? What's in it for me? Okay, that means thoda crystal ball gazing kariye. Please tell people about what this economic growth and the future holds in for equity investors in the market. Your thoughts on that, and if you can comment a couple of glimpses on a couple of sectors also, and that's what will be a big takeaway also for people who are interested in the markets. I hope I have not put you in a spot.
So, Sanuki is very relevant. Of course, Sanuki is very relevant. In years of meeting clients, in the IB days, one question was Sanuki. Yeah, you're saying so many things, sir. मुझे क्या है इससे? So I can answer the first question. I will not be able to answer the second question. Thanks to the position that I'm in at the moment, I cannot comment on specific sectors. But the story that I have been pitching so far is one of positive markets. What's my story? My story is that of, if I summarize, I gave you many numbers. But the idea is I'm talking about a young population that has not, that has just about tasted blood. Why? What do I say that? Well, when you have a per capita income of $40,000, how many more fridges, how many more cars, how much more energy can you use? When you have a per capita income of $3,000, you will buy cars. Because while India produces, just as an example, India produces 40 lakh cars a year. It's the fourth largest car market in the world. India produces more than 1 crore two-wheelers in the world. It is one of the world's largest two-wheeler markets, neck and neck with China. But the average ownership of bikes in India, the average ownership of cars in India is still meaningfully lower than global standards. So what I'm trying to pitch to you, ladies and gentlemen, is a country which is becoming large enough at this point that basic questions like RKM, what is RKM? Roti, kapda, and makan. So for Mr. Gregory, food, shelter, and clothing. These were the things that we were fighting for since independence. Okay. Today, luckily, first order conditions are met. Now we want to think of more. We want to think of consumption. We can add more cars. We are getting the roads to use those cars. Are we doing it absolutely right? No, we are not. We are not. Our cities are polluted. Okay. But can we get it right? Look at Beijing. 10 years back, Beijing was one of the world's most polluted cities. Not the case now. So even 5 years back, we had a delegation from Japan that asked me, what will be the penetration of EVs in India? This was 2019 or 18. In by 2030. And I said 5% impossible. I was wrong. Do you think we'll have 5% EVs by 2030, given the growth today? I think we'll have better. We will have better. So India is the place where the world will invest. India is a place where the Indians are investing. So I grew up in a market, sir. I don't have your experience, but I'm seeing the markets from the year 2000, 25 odd years now. And beginning years, all our clients were FPIs. You know, a Tiro price could go wrong, CalPERS could go wrong, capital would not like India, and India is going down. Today, the ownership of Indians is larger than foreign ownership of Indian markets. Actually, 17.4% of Indian markets are owned by foreigners. 18% is owned by Indians through direct means and through mutual funds. And I'm not counting insurance and all here. It's even larger than that. So Indian markets today are at a position where they are reflecting India's growth story. And what is India's growth story? 6.5% growth for the last 30 years. CAGR. What is expected? I give you the numbers, another 6.5 odd percent. 1.1. What is India's market return? 13% in local terms in the last 25 years. In dollar terms, for a foreign investor, you might ask, what's the point? Your currency has gotten depreciated. Even in dollar terms, Indian markets have returned 7%. But past performance is no guarantee of future returns. Of course, it is not. We are in the markets. But what I can say is India is at a position where growth is reasonable. It is strong. It is the fastest in the world. India is a young country, unlike other countries in the world. Indians have just tasted blood in terms of consumption. In fact, they're in some cases consuming so much that they're over leveraging. You know, Indian household debt has gone up from 30%, 33% of GDP to about 43%. But India is on the right track. Let's look at the risk, climate risk. The one big promise in global warming is India's promise. Let me say that again. The one big promise in global warming is India's promise to go net zero by 2070. Why? Because the other countries can't stop fast enough, or the countries are not big enough. The countries who are much longer, you might say Sweden has so much of net zero. Sweden doesn't count. Sweden is smaller than Kolkata in terms of population. So India going to net zero by 2070 will require $10 trillion. $10 trillion is 2.5 times India's GDP. That kind of investment India will need. And will that investment come? Just a simple example. The renewable power capacity addition that India has had in the last 2 to 3 years is nothing short of astounding. I was speaking to an investor just 2 days back. There is I forget the name, it starts with G in Gujarat, a renewable power plant that is the size of 5 Paris. Such a large plant. I mean, we have pardon me?
Five.
I don't remember the name actually. So India has over 200 gigawatt of renewable energy today. So, sir, my view for Indian markets is reflective of what I can say, what I've been saying so far.
Thank you. Now let's open up for any questions that you may have. Please try to keep your questions not more than 2 sentences. One to set the context, the other to speak the question. Any questions? Yes, Chirag, please go ahead. A mic for him, please.
So, sir, is there any internal estimate at NSE on when the transmission of RBI's past easing might reflect more meaningfully in urban demand and credit offtake?
No, good question. I think we should start seeing this by the end of the fiscal. By the end of the fiscal. I mean, see, monetary transmission takes time. 2 quarters is normal. We saw that in the 50 basis point cut has happened around May, June. Okay. It will take 2 quarters, and that's when you'll see lower growth. I want to add a little bit more here. See, we are in what is called a Goldilocks scenario at the moment. We have good growth, we have low inflation, we have a very good fiscal deficit scenario, we have a very controlled current account deficit scenario. Markets are factoring it to some extent, but the positive aspects of it will start coming out soon. They must come out soon. This point.
Okay. Any other question? Yes.
Yes, sir. Sir, good afternoon. My question is actually that what do you think, sir, in terms of access to affordability of healthcare by the vulnerable populations of India, especially? So, what could be the that scenario over the decade?
Okay. So yeah, again a very good question. See, one of
my another question would be maybe a little funny, but we just hear that market sentiments, it goes up and down with the market sentiments, it goes up and down. So have you, sir, with your experiences, with your such a huge experiences, have you ever identified anything called typical Indian market sentiments in terms of demography? Thanks.
The second question again, Mr. Pachisia is far more qualified to answer this question for me. I have dealt with institutional investors a lot more because I'll take the second question first. So my dealing has not much happened with retail investors. Yes, you kind of meet retail investors in your midst, but professionally, I had a very short stint as heading the retail desk of research for a company. But all my career in that sense has been with institutional research. There, people are far more rational. They don't go with TV news always. They see numbers a lot more. But Mr. Pachisia, you are qualified to answer that question.
You can answer his first question.
I will answer the first question. See, one of the things that the government has done, central government in this case, has done is that health needs to be affordable and health needs to be insured. So a program that was first started for elderly has been now expanded. In fact, I personally know a colleague, a friend in Indian School of Business, whose ideas that were actually taken up by the finance minister in this sort of regard. What will happen over the next 5 or 7 odd years is that the spend on healthcare by the government will start reflecting. So today, a lot of us do not have, by us, I mean Indians in general, do not have access to affordable, good quality healthcare. for various reasons. Lack of talent, lack of infrastructure, lack of financing options to finance that healthcare. A lot will change in this regard, sir. Yes.
Okay. Since I was not prepared to be taking questions, but so can you repeat your question
What's the typical Indian sentiment?
right now? So right now, there are two mixed sentiments, I must say. One, it reminds of the old Bollywood villain Ajit's dialogue about liquid oxygen. If you remember, his dialogue was, इसको लिक्विड ऑक्सीजन में डाल दो, लिक्विड उसको जीने नहीं देगा, ऑक्सीजन उसको मरने नहीं देगा. अभी that is what is happening with Indian markets. That's one scenario. That is, valuations उसको बढ़ने नहीं देगा और liquidity उसको गिरने नहीं देगा. Okay, that's one sentence. Two is that yes, there is a complacency because in the last 5 years, the new investors who have come into the markets have not seen a proper bear market.
Yes.
They have not seen loss of capital. Okay. And I'm talking about investors. I'm not talking about F&O traders. That's a different ballgame altogether. Okay. So they have not seen loss of. So there is a lot of complacency. There's a lot of overconfidence. Can it continue? Yes. If our economy continues to do the way Dr. Patnaik has just mentioned, and our markets continue to do that, it's always possible. Just like, Japan, when in the 70s and 80s it grew exponentially, never coming down till it started coming down, actually, So that is the kind of, and valuations can keep on becoming expensive because there's a perception of growth that is coming to valuation. So that is what is actually happening right now. And it can continue and valuations can remain stretched. That's the feeling right now, even in retail investors. As far just to answer, the trading part, unfortunately, and this is SEBI statistics, not mine, 90 to 91% of retail F&O traders are continuously losing money in the market. So please trade with caution. Two is that 70% of retail intraday traders are losing money in the markets. So please be careful. That's if I am able to answer your question. Thank you.
In fact, you made a very interesting point. I mentioned that we were 2.9 crores beginning of the pandemic. And I said that we are at 11 crores. So what does that mean? 75 to 80% of all our investors have seen the markets only in the last 5 years. Logical. Okay. When was the last time that we had a negative return in the Indian markets? Now 9 years back.
1920. March 20, the pandemic, it closed 1920.
Oh, you're talking about fiscal year. I'm talking about calendar year.
Calendar year was
1920, of course.
2018.
So most people, they have not seen a negative return in the markets. When did this last see a solid bear market? When the market goes down 20%. So this point, in fact, we have written it in our market pulse more than often that this cohort of people who are there in the markets have not seen a bear market. They have not seen periods. Who knows, sir? Who knows? I could not do better than the liquid oxygen argument. The liquidity is very, very high. Households are just, as I said, opening up their purse strings. But markets don't go up forever. Japan's example, they go up until they go down and then they remain down. I mean, so Japan took 35 years to reach where it was in early 90s. It took 35 years. So
they say that markets can remain irrational much longer than you can remain solvent.
Yeah.
So, yeah.
We have a younger population. Hopefully, we will not be like Japan.
Any other questions, please? Yes. Mic for the gentleman.
Good afternoon, sir. I'm Siddharth. I'm a mutual fund distributor. So the question is regarding the market. When the Reserve Bank cuts the repo rate. So it takes generally 2 to 3 quarters for urban demand to go up. But we see the rural demand goes up first. Why is there this difference? And one more thing, when the urban demand goes up, we often see people are over leveraging their income. They are taking EMIs more than they can pay for. So in the long term, as the GDP grows, will not that be a problem for the economy?
Very good question, frankly. See, the first part is empirically, it is not proven that rural demand will always go first. They should ideally respond first because loans become cheaper, and if it is close to a farming season when household see agriculture loans are not taken all the way around. You will realize that they are taken before the main kharif season or the rabi season sowing happens. So if it happens sometime around that point, you will see a blip on rural demand, but it's not empirically proven conclusively that rural will always respond first. To your second point, I mean, it's very relevant. Look, people, when their incomes increase, their consumption will increase. Sometimes their consumption can increase before their income increases or faster than their income increases, which is not sustainable, which is a very logical point. But what is happening in India is this thing that we have in our hands. Its average sale price for India used to be somewhere around 2 to 3,000 rupees. I'm not talking about smartphones. I'm talking about feature phones, because when you look at India, that's what happened. Okay. And what was the refresh period? Usually 2 to 3 years. The first phones, imagine your first phone and all. But you're a young man, I don't know. My first phones were 5 or 6 years before we changed over the new phone. Today, the refresh rate is higher. Today, everybody wants a smartphone. The short point that I'm trying to make here is a lot of consumption today is behavioral consumption, which is young people coming to the market, seeing incomes rise, and they are not uh, as prudent or as thrifty as the older generation. The older generation in India saw their incomes in a couple of thousand rupees a month, lucky to reach 5 digits, mostly in 4 digits. And at that point, you had to be thrifty. And a generation before that saw India's growth, which was very, very weak. The generation today has seen things which are much faster, much more. And that's where one of the points that I made was household leverage in India. Indians are not big borrowers because they're very thrifty. If they can't return the loan, they will not take the loan. Not so much today. From 30% of GDP to 43% of GDP. In a GDP growth which is growing at 6.5% in real terms, nominal terms, it is 10%. Imagine household credit is going from a higher share. Even if household credit share was the same, that means household credit would have been going at 12, 13%. No, household share is actually rising. So this is an example, classic answer of what you're saying. And, in some ways, this is a problem. The point is the path to growth is never uniform. It will have road bumps. This is one of the places. In fact, things have gone worse in some cases. RBI's recent crackdown on digital lending, where people were paying usurious rates, 40, 50%, because they needed loans. That is one story. Our household net savings falling down as a percentage of GDP to 4 decade, 5 decade lows is another part of the story. So borrow, but borrow responsibly. Yes.
Thank you. One last question. Okay, yes, Mr. Chuchandra.
Yeah.
Dr. Patnaik, my question to you as an economist. You have explained all the growth factor of the country. It's doing fantastic. Out there, you talked of the TFR,
Yeah.
and the balance of payment. The income per capita income. Now, if we go by the last 70 years, where we take it organized economic global, my question to you as an economist, the India factor growth, the second is the negative factor of per capita income, and the TFR, which is again becoming a problem for some countries for the negative growth. What do you as an economist feel is the falling of TFR is the ultimate solution to improving per capita income? Or would you suggest as an economy, the ideal condition should be India should be able to meet the current population at 2.1, what will be the solution? Because if we go have a look, I think I don't know the data, but my hunch is India's 10% of India's population earns about 95% of the income, right? So what do you think as an economist should be the perfect solution henceforward?
So, see, the answer will not be a drop in TFR. It will not be. So, what happens is drop in TFR is good. You have Jansankhya, which is not a problem. But lack of Jansankhya has become a problem now. You don't have enough people. So, India is fighting on both ends. And some parts of the country, neighboring state Bihar, has a TFR of over 3 at the moment. The average female from that state has 3 children, whereas many other states now have below 2.1. 2.1 is the replacement rate.
See, 5 states are below 1.5.
Yes.
That includes our Bengal.
Bengal also is below 1.5. Imagine. So this is not a good sign. The demographic dividend that I was talking about that we have for 30 years includes states like Bihar. So the change will happen sooner across some states than earlier. That is a problem, sir. It is not in my way. It's not at all in my way to show that less people will lead to an increase in per capita income. One of the things that we learn in economics is less population means less GDP growth. Simple, plain and simple. You have less people, less consumption. Less people, less consumption. You will not come out of a situation where there are less people and you will still have high growth. No, that is a situation. We see that in rich countries, but that is not a situation that's happening sort of here. And in terms of longer term trends, sir, you do need people. You need. My problem is not with people. My problem is with people not being educated. So the idea is not less people. The idea is people who will be educated. We have not done well from that front. We have 3 times the number of schools that China has. Let that also sink in. We have 1.5 million schools in this country. We have 500,000 schools in China, and China has a higher literacy rate. We have 1,200 universities in this country, 45,000 colleges in this country, and yet our share of global patents is very less. We have, how many LLMs do we have? All of us use LLMs. ChatGPT is one LLM. China has 90 LLMs. India has 0 LLMs at this point. Yeah. So the idea is education. I told you that was my first sort of problem.
Thank you, Dr. Patnaik. This
My
was a
pleasure.
wonderful session. I would now hand over to Rudrani.
Thank you, sir. So we have come towards the end of today's extremely insightful and enlightening exclusive session with Dr. Patnaik. We would now like to present a memento to Dr. Patnaik, and I would request you to do the honors, please.
Oh, thank you, sir. Oh, sorry. Thank you. Thanks a lot.
Sir, at the beginning of the session, we missed the presence of Shri Prashanjit Pal, who is the Chief Manager of National Stock Exchange of India Limited. I would request you to present a bouquet of flowers to him. Thank you. Sir, may I now request Shri Achyut Chandra, the Chairman of MSME Subcommittee of the Chamber, to propose a vote of thanks and conclude today's session.
Dr. Patnaik, Sri Vashisia, members of the chamber, guests and friends. At the end of today's exclusive session on Indian markets and macroeconomics, it is my most pleasant duty to propose a very hearty vote of thanks to our guest-in-chief, Dr. Tirthankar Patnaik, Chief Economics, National Stock Exchange of India, for addressing us today on such an important and in a very interesting way. With India's economy undergoing rapid transformation amidst global and domestic shifts, the significance of Indian capital markets has grown substantially. Over the years, these markets have matured into robust and transparent platform that not only facilitates efficient price discovery and capital mobilization and also reflects the broader economic trajectory of the nation. This evolution underscores the growing integration of financial markets with macroeconomic fundamentals where investor sentiments, regulatory reforms, and technological innovation together shape market depth, resilience, and global competitiveness. I am confident that today's exclusive session offered valuable insights into these dynamics, helping our members better grasp current trends and prepare for the road ahead. I would like to take this opportunity to warmly thank Ms. Prerna Singhvi, Vice President, and Mr. Prosenjit Pal, Chief Manager of the National Stock Exchange of India Limited, for their presence with us today. I would also like to express my sincere appreciation to Mr. Grigory Antonenko, Senior Consul of the Consul General of Russian Federation in Kolkata, for his gracious presence. I wish to also acknowledge the presence of Ms. Sandy Chen Wei, Director, Taipei World Center, Kolkata, and her colleague here. I must thank members of the committee, members of chamber, and guests for making it convenient to attend this today's exclusive session. With these words, I will request all of you to join me in carrying a hearty vote of thanks to our guest in chief, Dr. Tirthankar Patnaik, with appreciation.
Thank you, ladies and gentlemen. With this, we closed today's exclusive session. Kindly join us for lunch.
Thank you. Pleasure. Thank you. Yes.